Good day, everyone. Well, we see that the issues in Greece seem to have been sorted to the market's satisfaction anyway. Although obviously Greece is in massive debt, and so are some other of these European countries. So again, the life expectancy of the euro is its days are numbered, and I think that the QE issue is going to stay on the table perhaps longer than expected because of these underlying issues that are prevalent in the whole global economy today. So, Yellen can posture and say that things are looking better economically and therefore a rate hike may be warranted later this year, but I think it's just more of this broken record Fed speak, because they have to make the appearance they have to appear that they are being ever diligent and watchful and mindful over the issue of quantitative easing. So I think it's just a great posturing move by the Fed to secure that position, even though I think it's probably bogus. I think the economy is not necessarily turning that corner that it's been that the Fed has been waiting for the last few years. QE doesn't seem to be solving the problem. And you've got other problems around the world. Obviously China is slowing down. It's got some bubbles there in its markets, the home building market, the real estate market, and its stock market. And therefore we have a fairly treacherous environment that continues. Really started, after the financial crisis of 2008, and the whole QE money printing business has not solve the problem one bit. I mean, it's the patient has a disease, and QE is just a morphine drip rather than tackling the issue at hand. So, as Greenspan said, these are unprecedented times. I've never seen anything like it, and I'm a market historian. I've studied markets going back hundreds of years, just out of curiosity, and I don't see a time that's equivalent to this one, so it should be interesting going forward. We also have all these debtor nations. The U.S. can go ahead and say it's in debt to 16 trillion, but I've heard estimates as high as 10 times that amount. The UK and the European countries are no better off, although the U.S. is the biggest debtor nation, and then you've got the BRICS, Brazil, India, China, and Russia, and China is the world's creditor nation to the tune of trillions of dollars. So this imbalance has to rectify itself somehow, and I know a lot of people say, oh, there's going to be a crash, or there's going to be something sudden death, but a lot of these issues sometimes will deflate over a period of time, but really it remains to be seen what does end up happening. And in the meantime, we just continue to stay in the present. Gil and I were talking this morning that this is the most zen market that I've seen in 25 years of trading. In other words, it requires that you stay in the present, because the moment you take your mind off the present, it could end up costing you. Because we've seen how stocks can baby step ahead, and if you don't take those gains and you have them, they can evaporate in a matter of a day or two. And so for this year, this has been a tough year, but it's good that we have some members that are doing well, that have bought on some of our actionable reports, and then take it upon themselves, based on their risk tolerance levels, to take profits in the stock when they had them. And that's just been the key, the rhythm of this market. And I would like to go through just a couple names here. CACC was one we talked about last week, and this is one we put on the list, well, the actionable list, shall we say, right in here. Let's see, where are we going? 623. Yeah, on this day it had a pocket pivot, and then last week I was talking about this one. It was getting ahead of itself, as you can see. It breaks out and it just pointing straight up. That's a great place to take profits. The volume has been big, on this breakout, but you can't get greedy. And then on this day, it has a massive reversal day. So, at the very latest, you'd be selling at the close, at the very latest. I mean, I personally would have been selling sooner than that. and then it just goes sideways, sloppy, in a sloppy manner, and then it breaks down again. So that's pretty textbook. I love stocks like this because it gives you an easy entry and a very easy exit. And based on some of the inboxes, emails I get, it sounds like there are at least some members did capitalize on that one. Then we've got Netflix, we just put on the list today. This is the third time this company has gapped up on a strong earnings report. This company definitely has the monopoly on video streaming. It is an excellent product. I've used it, and it's so handy, it's so easy, it's so cheap. So yeah, why wouldn't everyone want to use it? So it kind of defied expectations because we thought that it had a huge run in the years past. So you would think that would have been it. That would have been the climax stop, or not a climax stop, but that would have been the end of the stock. Like most stocks, they have a limited lifetime. But this company was able to reinvent itself based on the infrastructure and basically have earnings earnings and revenues completely recover and soar. So we've had some gap ups, and yeah, the PE is about as high as, this reminds me of Amazon back in the late 90s where everyone said, oh, it's got to be shorted. And some of the biggest short players out there kept shorting Amazon, and we all know what happened to Amazon. It kept going up. It was not just a 10-bagger. I think it was a 100-bagger. So it defied all odds, all expectations, but it was the leader in retail space. That was the difference. So it could afford to have those ridiculously high PE levels. And in fact, a lot of the late 90s, I think it didn't even earn anything. Therefore, it was basically trading on expectation. But Netflix is also the dominant leader in its space by far. So therefore, we can, we don't use PE as a metric anyway. If the company is doing what it should, price-wise, and it is clearly the leader in its space, and what competitors does Netflix have that's going to take away market share, all those pertinent questions, we can continue to consider it an actionable name. And again, you keep stops tight with viable gap ups. If it breaks below the low within context of its chart by usually 1 or 2%, then you can sell it. So if you bought when we put it on a list, I think it was around 109. Then the low of today is 107.68. Your risk is just a couple percent. So and on the other hand, you've got some good upside on this thing if it repeats what it's been doing. Another stock I'd like to mention is MBLY, and this one went on the list as a pocket pivot on June 25th. So that was this day here. Now, after that, the market got crushed. The NASDAQ went straight down for 2 days. And yes, you might have gotten whipped out of the position, keeping your stops tight because the market looked very uncertain. But as we also know, this is a QE market. So when the NASDAQ has 2 horrible down days, and these are those 2 days here, you figure, what, there's going to be a floor that comes in, something's going to happen, QE is still alive and well. And you'll also notice on Mobileye, on this day here, on the 29th, it closes in the top half of its range despite the market closing at the lows of its intraday range. So that's a sign of strength. So if you had gotten scared out, part of good investing is be able to say, you know what, I'm going to buy the stock back because it's showing a lot of resilience, and if the market bounces from here, it's probably going to bounce too. And indeed, that's what happened with Mobileye. It started to go higher, and then it had this gap up here on volume, and it just continues to go higher. Now, in context with just this portion of the chart, it looks like it's extended. But if you look at the weekly down in here, you'll see that it's just breaking to new highs. So again, in context with the weekly chart, you could still be sitting on this position. Yeah, you might take some profits today, but overall, I would keep at least a core position because it is breaking to new highs on the overall chart. And if it starts to break down in the days ahead, then yeah, then I would be taking your profits at that point. What are the profits now? If you bought this thing on the pocket pivot day at 55, now it's at 61. So yeah, you're sitting on a nice little, what is that, 20? It's about a 22% profit actually. So nothing wrong with trading around a core position, keeping that core, and thinking that this thing could have some legs left in it before it gets ahead of its pattern. Other than that, commodities continue to take it on the chin. Price of oil, price of gold, the CRB index. You know, we had all these instruments bouncing in March, but now they're breaking down again, and so that could be telegraphing that the global economy is not well, and well, it certainly isn't well. But we were hoping that maybe this is a real bottom being put in by, you know, these various instruments. I used USO. Many of these instruments you could use to track the price of oil, and so that we thought maybe that's the ultimate low. But now it's breaking down again, and the same thing is observed with the basket of commodities across the board. And gold, I think, is hitting some new major. Let's see, broke through some major support points. Let's see, it had that point there. The low was 112, and now you can see that it's at 109.74. So yeah, it's not looking good, and the same thing could be repeated through some of these other commodities as well, because if China has problems, then it's going to exert less demand for these commodities, and China is a huge, well, it is more or less the world's economic leader by using various metrics, and by using the ones that still say the U.S. is the world's leading economic leader. Those metrics will eventually show that China does pull out ahead. It seems that's based on trends, and yeah, China has problems, a lot of problems, but so does the U.S. And I think it's probably inevitable that China does pull out ahead in the years to come. There's also a very scholarly Goldman Sachs report done, and some other reports done showing that India then is going to pull ahead of China due to demographics by the year 2025. So that's 10 years away. So at any rate, we're going to see some sort of major changing of the guard with respect to world economic leadership, and you know, call it the old world order. That is the U.S., the U.K., and Europe. The debtor nations are probably going to start taking a backseat to the new world order, which is the BRICS, the creditor nations, China and India, and so forth, and also quite resource rich in some regards. And with that, I'm going to turn it over to Gil.
I don't know. I think you were on a roll there, Dr. K. So I think I'll just let you keep going now. Okay.
Always good fun.
I mean, okay. On a practical basis, I view this as a somewhat bifurcated market, and as always, you know, you get the 4 to 5% correction in the indexes. Everything's looking ugly, but you can see there was a context for a low if you were paying attention, because the S&P found support along the 200-day moving average, and that didn't want to give way, and the NASDAQ found support along the May low here, which of course corresponds more or less with this April low. So there was a potential for a bounce here, so you had to be open to it. So if you were getting short in here, you made some money. I'm not going to say a lot. In some cases, it was possible to make some decent money, but I don't think it's really a rich environment for shorting any more than it is for playing upside trends. But I think you do have to be aware of where you are and what can happen, and you can sometimes put that together with what's going on in stocks. This has been one of my daily working on the short side type of names, where I've come after Apple in here, and it finally broke down, and then comes down to the 200-day. That, to me, that's a cover point, because you're also bouncing right off the 40-week on the weekly chart, and so that right on top of the space here, and so that makes sense as a cover point. Now the stock's up here at the 50-day, and you can see right now it's reversing below. I'm actually short the stock right now. I can show you what I'm looking at on a 620 chart right here. I actually thought it was kind of short above around 128. Because you get a little bit of the stretch, and I mean not a lot, but Apple doesn't tend to show a big MACD stretch, so it's rolling over and coming back down. I think you can see it come down. Earnings come out next week. I mean, that's the other wrinkle here, is that a lot of names will be announcing earnings in the next few days. So do you really want to play earnings roulette, or if you have profits in something either long or short, why not take them and then hang out and wait? Because you can always, you know, from a perspective of a trader, the Netflix trade here, you know, some people were telling me there's seasonality regarding Netflix, and it always goes down in the summertime and blah blah blah, and you know, all that to me is a bunch of BS, because seasonality what a stock did every summer for the last 10 years means nothing about what it's going to do this summer. And trying to get into this big think BS doesn't really get you anywhere as far as I'm concerned, and I would just blow it off. I mean, it makes for great filler if you're trying to put on a webinar or talk about the market or write an article about the market, I suppose. But on a practical basis, it's useless. So here you got the Bible gap up, so you know what your parameters are in terms of the stop, 107.68, so you're running about 3% lower than where you are right now. So you can take a shot, and if you look at this, you know, you broke out of this big ugly cup with handle, almost looked like a pod with handle, but it didn't really break down. Tried to, and then just came right out. Netflix is a stock that refuses to die, and so you might see it coming out of this sort of ascending channel to some degree, and now it's pushing higher. So you know, you can take a shot at this, I think, and you have a very well-defined stop. The closest you could have gotten to the low, you know, 108, 109, and when we put out the report this morning, we did put a report out on it, did we, Dr. K?
That's right. Yes, we did.
Yeah,
it was trading around 109 when we put it out.
Yeah, so I mean, you could have taken a shot there, and you'd be making a little money right now. See where it goes. But I tend to treat the market as a bifurcated market. I've had some good trades pop up on my screen. Amberella, I thought looked viable right around the 10-week line, which is, you can see here on the weekly chart, it gets real tight in here. Then selling seems to be fading in here, and you're drawing up. So, yeah, take a shot on a trade here. You get a quick 10%, sell into the move. Maybe if it pulls in, it can set up again. But I wonder when earnings come out with this puppy. Let me take a look here real quick. One second here. Earnings come out on 9th, so you got a lot of time before earnings come out on this one. So if it did drift back in here or held in tight along the 20-day and volume chart up, then I think I'd be interested in coming back into the stock. Another one I thought was interesting is Zebra. Off the 50-day, you had a pocket pivot right here, and it's moved higher, and it's kind of drying up along the 20-day. They come out with earnings, however, on 8/4, so that's August 4th, according to HGS Investor. So, you know, that's a couple, 3 weeks from now. What is it? About a little less than 3 weeks from now. So, but you see, you could have nailed it right there. Facebook, I missed. Right at the 20-day and the top of the prior base, could have been picked off when the market looked ugliest. And when the market turns, big stocks like this turn with it, just like Apple did, which was a great short. And then it just bounced off here. Now I think it's a short again. We'll see how this pans out today. Market's a little bit fuzzy as we get up near the highs on the NASDAQ, as well as the S&P. So, you know, now that you're up at the top here, you're going to get everybody excited. Maybe they roll them right back in. So it's a little bit, I think if you're chasing stocks now, you're a little bit late. You might try looking at things that are pulling back and are drying up a little bit, like FireEye. You notice coming into the 50-day volumes drying up this morning. That doesn't look too bad. And Palo Alto Networks has just continued higher. It doesn't really care what the market does here. It just holds a 50-day on the pullback and then heads higher. So that one's doing pretty well. But others we've seen in the cybersecurity group have just been raked. Vasco Data, nice breakout, and then kaboom, gets busted. I know some people try to buy CyberArk on the pullback. You look on the weekly chart, you never got to the 40-week, so you could be headed there, and it just doesn't seem to want to get going. Now, I don't know if you look at this as some sort of a Wyckoffean retest where you make a low, and then you can see there's some congestion here, so it looks like it gets some support there, and it bounces, and now it's pulling back in. And volume is kind of drying up. So, but you know, this is kind of unclear. I think you're better off with the stocks that have been holding up further up in their patterns. Fortinet was able to hold the well, the 65-day exponential, actually close above the 50-day here, and now it's kind of drifting higher. I think earnings come out soon for the stock. So one of the areas that has been somewhat fruitful on the short side is semis. The semis are weak. NXPI, to me, shortable at the 10-day more recently. Before, I thought it was shortable. For those of you who've been following the webinars for the last few weeks, I thought it was potentially shortable in here. And it has broken down. And, you know, a lot of people will look at, let's look at this one. This is another one. I actually put a little short out on this one. It's bouncing up against the 20-day, so we'll see if it rolls over. But psychologically, people would tend to want to short this one because they see the break and then the big rally, and now this looks, it's sort of the inverse of something looking cheap on a pullback. This looks less, this looks more expensive on the bounce versus NXPI, but this is actually the weaker one because you can see you undercut these lows. Now you would expect some sort of an undercut and rally. It tried to do that here, but it didn't last, and it hasn't rallied with the market. So now it's following the 10-day to the downside. Looks to me like you're headed for the 200-day moving average on this one, and that would take you right into this. Well, no, maybe it goes a little bit further than that. Maybe it comes down into this structure here. But you can see this looks pretty weak. Another one, I shorted this one yesterday. It came out with earnings. It didn't really impress me. Stock, this is really not what you'd call a big leader, but it tends to be pretty volatile on the weekly chart. You can see that. But it's sort of a laggard semiconductor. They came out with earnings. They gapped up to the 50-day boom, short there, and then today it's gapping down and busting to the downside. So I think you can see what's a good semiconductor ETF. Is this a good one? SOXL. Yeah, you can see this. The semis are ugly. So I know Intel, I think, was gapping up this morning on earnings, but that may just become a short right there at the 20-day moving average. So you can see the big head and shoulders. We've been talking about this, and I think just in general the whole group is ugly and pretty weak. So that's an area that I look at to potentially go short. Well, looking at other things as long trades, you can even see Netflix breaking out to higher highs this morning. So that's working. That's setting the Nasdaq up much higher. So I think we need to go a little bit further, and we might get to a new high on that. So somebody says SHW looking like a nice LSFB short. Let's see. Well, kind of like you're kind of late there. So, I mean, it's gapping down hugely today. It looks about, what, 10%? What is that actually? About 10%, a little more, maybe. So I don't know. You should have told us about this yesterday. But now you've gapped down. I don't know if I'd go short that thing here. If it rallied up to the 200-day, maybe that's where it comes in. But that is a failed base now. But it was already starting to fail. Notice how it tried to break out right here. So you have a failed breakout here, boom, and you do this pretty standard maneuver. You're finding support along the lows of the base. You're bouncing up into the 50-day over and over and over again. You go 1, 2, 3, 4 times, and then finally, kaboom, the thing blows wide open. And that's pretty ugly. So what they do, miss on earnings? Probably. Any other questions? Nope. Let's see, what else you want to look at here? I wonder if GoDaddy is going to try and get going. It's down here, volume's drying up. When do earnings come out on this one? I think they're coming out next week. Let's take a look real quick. No, first week of August, looks like. So, it's possible it could get going from here. You're kind of in a deep down position. Sedge is another one, Solar Edge. That came down all the way into this area. I thought it might get down here and fill the gap completely, but it never did. But it did find support somewhere on top of the structure. And now you've rallied up. Now you're doing this white coffee and test where you pull into the 10-day and volume is drying up. So maybe that becomes viable. I think, however, they come out with earnings first week of August. So not, so that may have some potential if the market continues higher. So, and Trexon has really gotten going. You see that the breakout here fails, so we pull into the 50-day. Volume is pretty light coming into the 50-day. So as it's turning here, holding tight along the 10-day, and volume's drying up, it could have been bought. You had a pocket pivot. If you caught that early, that looked good to me. And now you're running up. There was a biotech conference, I think yesterday, some sort of finding alpha or searching for alpha or something, some sort of conference that was being held yesterday where some big hedge fund guy was talking about it, and that's gotten it going. I think also they have a lot of participation in a lot of different companies and licensing technology and whatnot, biotech technology. You know the story. In any case, stock's moving higher on a breakout. I suppose it could have been seen within range if you want to buy it, but I am suspicious of breakouts in general. So, but a nice 3-day move. I'd see if you get some kind of a low volume pullback. UTHR, a short. I don't know. That's kind of, the biotech group has been strong, so I think if you're trying to short biotechs, it's a little risky. But I'm not really sure if I'd say this is necessarily one I'd want to go after. But you could always test it and use a 50-day as a stop. So, I mean, you can see what it's doing. So if you think it's a short, and you need to understand where you're gonna put your stop and how you would handle the trade. So if you need me to bless it for you, then you probably shouldn't be trading at all. So I always try to avoid this idea that somebody wants to run a trade by me as if I'm supposed to endorse it, and once I endorse it, that means it's going to work and they can just go hog wild. I know somebody's asking us, like, would you buy Fit into earnings? I don't buy anything into earnings. So I did notice you did have a pocket pivot here, not quite down to the 10-day. So this thing seems to be very popular. Is this all that hot, Dr. K? Do you know anything about it?
You know, I mean, I looked into it to some extent. You know, there's this huge health craze. Well, that's been going on in the States, and so it's the right time, right place, and it's you know, it's nice that it's all the wearable stuff. I can't comfortably say though that, you know, this is a very competitive space though. So I'd still be, you know, mindful. I mean, the earnings and the sales on this thing are astronomical. It looks fantastic actually. So if they can maintain that kind of leadership, then I think it's going to go a whole lot higher. But that's the problem. Can they maintain this kind of growth? Because there's a lot of companies that are aware that that people want to have this sort of these sorts of tools at their disposal, you know, for getting more fit. I don't have a real good feel for the competitive level on you know, what companies are going to start taking market share away from this. And again, as you know, we're not pure fundamental guys. But I think I'm going to look into it in some more measure, because certainly the price looks like it's a top performer, and the fundamentals right now look fantastic. So I think it's worth looking into in more detail.
Okay. That said, there's nowhere to buy it now, and I don't think I would just buy it willy-nilly going into earnings. That would be kind of dumb. Check out MDXG. Yeah, we've seen this one before, and I noticed it did break out. It's a thin little teenage biotech, but you really, if you're going to buy this thing, you have to buy it on weakness. Chasing it up here isn't going to, I don't think, going to do you any good. But right now, there's a lot of interest in a lot of the little biotechs. You see Zyop had a pocket pivot, I believe, here, and it's trying to break out of this sort of cup with handle formation. Celgene, of course, we know yesterday you had a viable gap up, and so it's holding up on that, and actually looking okay. So I'm actually surprised it's working, but you're coming out of this base structure here, so it is a big breakout. My preference with viable gap ups, and I guess this applies also to Netflix, is that I've noticed they have the most upside thrust and the most power in when it comes to newer names. So, you know, I think a newer stock, like when Tesla was breaking out a couple of years ago like that on a viable gap up, I think FireEye last January, 2 Januaries ago to be specific, had a big viable gap up, and those things just launched. And I find that those tend to be those tend to be the ones that have more upside thrust and sustainability. With some of these big caps, you know, you see they'll get like Amazon here, you know, has a big viable gap, and then just sideways for a long time. Now you're breaking out. I think they were also at this or they were talked about at this conference, and they did this big promotional deal with Prime members. I guess I'm a Prime member, but I didn't buy anything. So, but I guess, you know, I don't really want to buy something just for the sake of buying something off of Amazon because they're offering a deal. But in any case, they did that. I guess that was well received. So let's see.
I just
Go.
wanted to say something on Fitbit. The thing with this, yeah, there are no buy points. It's well extended, but if it does maintain its leadership, and that's a big if, because you got the likes of Apple and Samsung as massive competitors to this company. Because the fact of the matter remains, it's a very efficient space. When there's profits to be made in an area such as wearable fitness apps, then the big guns are going to move into the space, and I think that's going to really cut down on Fit's leadership. So while the fundamentals look fantastic, about as good as it gets, that might be all she wrote in this stock. But we'll see in the technicals. If it maintains leadership, it will form some sort of basing pattern. It'll issue a pocket pivot, maybe a viable gap up, and it'll be off to the races again. So we don't have to overthink that. You never have to overthink. Let the technicals tell you what to do. But right now, it is in a leadership space, but Apple and Samsung are probably going to knock it off its perch.
GoPro had a pocket pivot, I believe, here coming up through the 50-day. That's one to keep an eye on, I think. Kind of interesting situation. But I think earnings come out. Let's see. You know, if something, yeah, next week. So I don't know. You got to play that. It's a little sloppy, but maybe it's setting up. Twitter. I thought Twitter was pretty funny. Let me get back to this link here. Twitter had this big move the other day. That was a shortable move. It's kind of silly, actually. There was some babble on some website. It was a phony website trying to mimic Bloomberg and make it look like it was a Bloomberg article. So they ran the thing up. It was interesting to watch the lemmings come after, but it looked like a short. It hit the 65-day exponential. It looked like a short. Now it's come back in. That is, Dr. K, would you call that a pocket pivot 3 days ago?
Yeah, right into a major moving average line. Yeah, obviously, clearly not. So
Yeah.
you know, and it's a bottom fishing play. It doesn't look good on the technicals. So no, I have no interest in this one until it really can shape up.
It's not really rallying with the market. It's a little sluggish, but you know they get everything going, so this one also moves higher. LinkedIn. Somebody came out and upgraded the stock yesterday, so you had this gap up move. It's not really on heavy volume, so I wouldn't consider it a viable gap up. But yesterday I did short the stock using the 620 chart here. If we go yesterday, you had it open up and then it just rolled over right around 221.50 and ended the day down around 218 and change. The stock's up $1 this morning, but I think it's still sluggish. Earnings come out next week. We'll see what it does, but kind of watching this here today. And you
I wanted to
go ahead.
No, actually, are you done? When you're done talking about this one, I wanted to actually talk about GoPro, just
Okay.
in brief.
Well, I'm just looking at watching this on the 620 this morning, potentially as a short again, but we'll see what happens. So far, it's holding 65-day exponential. Let me bring up GoPro for you. Go ahead.
So GoPro, the virtual reality market is potentially massive. It's going to be a multi-billion-dollar market in the years to come. So GoPro has the potential to be the leader in that space, but again, this is a ways off in terms of VR becoming one of these, multi-billion-dollar markets. But it's just good to be aware that, again, the technicals will tell us what to do. We did get that pocket pivot above the 50-day, and we'll see what it does. It is still kind of a bottom fishing play, but if it can emerge as the leadership in a very a space that has huge potential for growth, then we'll see it in the charts. And they've got Oculus Rift, and you got these devices where you have the VR, the virtual reality world by putting on these devices. So it's great for gaming. It's great for Skyping video chats, all kinds of purposes. And I've used Oculus Rift, and I got to say it's quite mind-blowing. So I think when the rest of the population just puts on one of these devices, which are actually going to be, the price point's going to be quite inexpensive, on the order of I'd say just a few $100s or less. I mean, the price point will start out actually relatively cheap to what a lot of price points start out at, and then they're going to get increasingly cheaper. I think there's going to be a mass adoption of this technology for all these sorts of purposes. And actually they talk about Total Recall, if you all remember Total Recall with Arnold Schwarzenegger, where you have these fantasy erotic modules that you choose, and then you have this experience that's all erotic. And this article is talking about how that is going to be the biggest part of virtual reality, because it is going to eventually become like that Total Recall sequence. And I thought, well, the internet was 75–80% of the internet was all based on porn. That's what really catalyzed the growth of the internet back in the early 90s. And so I don't think it's going to be any different with virtual reality modules. I think it's going to. They did some metrics, and they said that the porn industry is actually going to embrace virtual reality, and already are making inroads for that sort of service to their customers. So it doesn't surprise me. History does repeat itself, and we're all made from sex, so why not? I think anyway, G Pro stands to benefit from this, but watch this space very closely, because there's going to be competitors.
Yeah. So, but you see a Pocket Pivot. I don't know. Am I going to buy it going into earnings? I think they're on the 21st, so that's going to be on Tuesday along with Apple. So I don't know. Let's see, cruising on down the line here. Let's yeah, this one's just hanging out. GW Pharmaceuticals, Amgen. Been watching this as a potential short. It's up near resistance, but nothing really happening here. I think it's more a question of where the market goes from here. If the market goes up or down, or is able to sustain this bounce, or it just turns out to be something that takes you back up to the highs and then you streak back to the downside. Still a lot of potential news that could create issues for the market, and I think it's really just to me a bifurcated environment where I want to play stocks based on the setups that I'm seeing. So so where I can go short an ASML, I can go long an AMBA down here, or a Zebra, or another one. Okay, here's another one, another Z stock. This is interesting. You had a Pocket Pivot here, Zoe's Kitchen. So had a big breakout, but you have this Pocket Pivot sort of gap move here, and this looks kind of interesting, like it wants to go higher. I'd rather be buying it into the 10-day line, but does look interesting. Salesforce just rallying, wedging up into the 50-day line. This almost looks like, you got a late stage failed base here. It's a base on base, and it fails on this breakout attempt here, and now you're wedging up into the 50-day. This might become a short. It's something to keep an eye on. Watching FireEye intraday. That looks pretty good. When did they come out with earnings? Let's take a look. At the end of the month, so in a couple of weeks. GoGo. I don't really care much for this. I think this is really cheesy. Big breakdown to the 200-day. Actually hits the 40-week more or less on the weekly, and it's just steadily wedging up with the market. This could just blow. I don't know. I don't trust this thing. Netflix still moving higher. 112.28 right now. 26. Taser comes out with earnings next week, I believe, and they're hanging in there along the 50-day line. It's see how it violates the 50-day, but it holds a 65-day exponential. So maybe this is going to try and go higher. There was some talk about people wearing cameras, teachers wearing them, and all sorts of people wearing them, so we can see what we can know what everybody's doing all the time. I don't know. I guess my wife would like to put some on our teenage children, and maybe that would work for her. Let's see. Getting back to the biotechs, retro fan, it's moved higher. There's no real buy point in here unless you wanted to buy it along the 20-day when the volume is well, it wasn't really drying up, so tough to come in on that one. Eyes, just trying to build a base here. I guess they were on 60 Minutes on Sunday night, this past Sunday night, and nothing really happened there. So Didn't get the stock moving to the upside. This Horizon Pharmaceuticals has been acting well. Notice a lot of, I guess this is due to the Russell rebalancing, Dr. K. Is that what this volume is all about? Gets hit, holds 20
Yeah,
day.
yeah, I believe so.
Yeah, so who knows what this thing does from here? I don't know. We looked at Fortinet, Tesla. You got the breakout, you get the Bible gap up type move here, but that just fails immediately. And you're waiting for earnings, I guess, coming out when? Let's take a look. 7:30, so the end of the month in a couple of weeks. So I don't know if you really need to do anything there. So Bluebird, this one's almost looking like a short now. It's trying to rally. It rallied up into the 50-day. Looked good yesterday. Now it's rolling over. Interesting. Gilead bounced off the 50-day on the pullback. That's been doing well. These big biotechs have been doing pretty well, except for Biogen. I keep thinking that's a short up in here. Maybe it rolls back to the 50-day. Earnings come out next week, though, so it's not clear what you would want to do with that necessarily, if anything. Let's see. Just going to run through some names here real quick. This Cheetah, boy, that sure blew apart. There's a danger in owning Chinese names. And China in general, what do you have? You have this really kind of climactic low. You just blow apart here. Now you've rallied back up and you're trying to recover, but you haven't yet. And I still think that China is a wild card, and it could create issues going down the line. So I think their economy is going to slow down significantly, mainly because of the demographics. The one-child policy has resulted in a dearth of young people, and demographics in terms of younger people coming up and moving into the economy are a big factor, and I think that's one of the things working against them. And then they have these huge bubbles that they've created, and I guess they've learned something from the Fed, in that they believe the solution to a bursting bubble is to create an even bigger one. So I don't really agree with that, but I think that's what they're trying to do. Also, creating laws and not allowing people to sell, outlawing short selling, not letting 5% holders sell any stock, delisting or halting trading in almost half of the names. I think that's about a third. They've let some of them reopen. And that, of course, you saw some selling in that over the last couple of days, and you're trying to stabilize in here. What's the other one that you like? Is it PEK? Yeah, there we go. It looks very similar. Is that the smaller cap?
That's right.
Okay. So
that's why it's much more volatile.
Okay, that makes sense to me. In any case, that's still a wild card. You can kind of see it. You're starting to see a head and shoulders form on this. Maybe this is the right shoulder, and I wouldn't be surprised if you went lower. And then the question becomes, how does that affect our markets? Now, if our markets are on a relative basis stronger, we may just continue chopping sideways, and it becomes a market, a trader's market, where you're looking for opportunities on constructive pullbacks and other types of unorthodox buy points. I think the whole idea of buying breakouts is gotten sort of worn out, especially in this market. Someday it'll work again, but I think when you're in better trending markets, breakouts will work, because intuitively any stock that makes a new high at 50 and it's on its way to 100, it's got to break out to do so. So at some point maybe you'll see breakouts work again, but they don't work very well right now. And I think the markets are changing in a big way because of the demographics in general. In the U.S., the baby boomers are retiring or have retired, and you have no real new investors moving into the market. The millennials, I guess we call them, they don't really seem that interested, and their numbers aren't that great in terms of providing the kind of fuel that the baby boomers did for the market back in the 1990s. And that was a big demographic shift as baby boomers started moving into their 40s or so, and those are their prime saving and investing years, and they helped, I think, to drive the secular move into the stock market back in the 90s, which was a great parabolic move. That was an orgasmic thing. to play on the long side, as we found out. Anyways, let's see. Not many questions today. Everybody must be sleeping. It is summertime. You know, it's I'm getting ready to head out on vacation myself. Dr. K, you're on perpetual vacation, right? You're still in South Africa. It's wintertime though, isn't
Yeah,
it?
let's see. Actual vacation since I finished my PhD. So
Yeah,
the first
so
day, January 22nd, 1994, was the first day of my extended vacation. The day I started at O'Neill.
just one long
Well, it's always a
vacation.
vacation. If you don't see work as work and you see work as fun, then I think it is a perpetual
I agree.
vacation.
Yeah, no, I agree. I'm actually heading. Got a big house out in the Big Island of Hawaii for the month of August for a couple weeks there, and uh, we have some friends following us there. One of them is a broker, and he's going because he's got to get away. He needs some time away from what he does, and I'm excited because I get to trade. The market opens at 3:30 a.m., so I get to trade early in the morning, and I'm done at 10 a.m., and then I have the rest of the day to do whatever I want because I don't really feel like I have anything to get away from. So in any case, I hope a lot of you get that situation at some point in life. Let's see. What else are we looking at? Anybody have any great questions? Any brilliant stock ideas? How about Jose? What's he up to? He looks like he might be pushing up into shortable range. He had a cup with handle breakout attempt here, failed. And boom, down through the 50-day. It's a semiconductor, and so rallying up to the 50-day, maybe that's going to be all she wrote. So I do like the sedge here. I'm noticing it's moving up. I own it, so I buy this little pullback here along the 10-day, looking for the white coffee and retest. I do think this has strong fundamental theme behind it. So, I mean, if anything's going to work, maybe it works, maybe it doesn't. But my stop is pretty clear. If it can't hold the 10-day, goodbye. LinkedIn, I think just see if my order went off. Yeah, I'm short it now. So it just crossed here. This looks like on the recross that was a short signal for me. So we'll see if it stays below there. I'd be using on an intraday basis when I do this. I'd probably use the 220 level as a stop on a short-term basis. Let's also look at software toolworks. This is a short here. Now you're rallying back up into the 20 period line. Maybe on this one it's 102 would be the stop on an intraday basis if I'm going to test a short here. Maybe it works, maybe it doesn't. Either one is fine with me. So because like they say, you miss 100% of the shots you don't take. So I'll try some of these out, and you get some love with something like this, and you can sense that a group is weak. So when you're looking for shorts, if somebody wants to talk about shorting a biotech, but on the other hand, you think about the group strength, because I've looked at, whoops, come on. Celgene as a short, as it's breaking down here, but it's come out of it. And Gilead I've looked at as a short down here when it was looking like it was going to fail. You had the breakout failures in here and, all this stuff, and it looked like it was going to blow apart in here. Now it's just gone to new highs. Biogen is the same thing. So they don't really want to blow apart for you. So on that basis, you want to be looking for the weaker groups. And so I think if you look at the SOX, you can SOX L. Is there a slower? This is a 2x, right, Dr. Hay? What's the 1x?
Boy, I haven't looked at. I used to use the general index, but SOXL is the.
What's the general index? I mean, okay, I think on e-signal
Looking right now.
dollar
SOXL
sign
is
stop.
the.
There it is. No volume though, but you can see.
But I usually use the generic SOX index. That's the 1x, but it's not. It's the actual index. So I never had to use the 1x.
Now, I think I screwed up. I should have hit the Intel on a short at the 20-day moving average. Instead, I'm short SWKS here, ASML. ASML is working, but SWKS doesn't want to seem to die here. Let me take a look at that. Yeah, it's kind of holding tight. We'll see what happens. Maybe it tries to push up through the 20-day. I'd use the 20-day as a quick stop, though. Market's sputtering around a little bit. Nasdaq's up 48. Thank you, Netflix, for the most part. Amazon's helping there too, and it looks like you got Google up, Priceline up 14 bucks, but not much. That's starting to look a little toppy. But again, Priceline is one of these stocks that it starts to look ugly, and then it just keeps going. So let's see. Here's this one. There's a Bible gap up for you. Somebody's asking some questions here. What sectors does the Iran deal help or hurt? Why do I care? Dr. K, do you have any idea what sectors the Iran deal helps or hurts, and does it really matter? Obviously, oil, right? Is oil rallying today? No. So it's not really, is it doing anything to help any of these oil stocks?
Well, it's going to suppress,
no.
I mean, it's going to allow Iran to compete in the world oil market, so it's going to suppress the price
Right,
of
there
oil.
you go.
That's
I
the
guess
reason
it would
why
be oil.
USO is struggling.
But you don't need to worry about that kind of stuff. I mean, that's this big think BS. It doesn't really get you anywhere. You got to look at what's happening in real time and look what the individual stock setups are showing you. Because if there's going to be a sector that is helped by the Iran deal, then you're going to see it in a group of stocks, or particular names in that group are going to start showing you buy signals, and that's where you start buying them. And you don't try and come up with some big think about, oh, what's the Iran deal is going to do what to what stocks. Who cares? You watch what they do. I noticed Taser's starting to move all of a sudden. What are you guys all buying it here? It was sitting there, now it's starting to move. Maybe it's going to have a pocket pivot. I don't know. Interesting. I noticed Sedge is moving too. You guys, what are you doing? Are you pushing these up for me? What, you could have at least let me buy more first. Anyways, somebody says, have I identified Sonic correctly as a pod? Ellis, let me see. That's not a pod. So what it is it's just a late stage failed base, and it's not a pod because it's not deep enough to be a pod. But it is, but here's the other thing about this is that if you want to try and put a label on something as a pod, a punch bowl of death, or whatever, or late stage failed, it doesn't really matter. It's the essence of what's happening here is that it is a later stage base, whether it's a pod or it's a flat base, a cup with handle, a cup in this case, and it fails on the breakout here or on the attempt up the right side, and you gap down. Now you're heading lower, and you're below the 200-day or the 40-week here. So that would become, if you wanted to short this, it trades 1,156 a day. You're kind of on the borderline. If you wanted to short this, I guess you'd use the 200-day as your quick stop, or the 20-day if you want to give a little more room. And maybe that does make sense because that's 29.66 is trading at 28.89. Yeah, that's reasonable. But I would say it's a late stage fail base, and you can see the big volume breakdown here, and then the big volume breakdown here probably tells you this thing's under distribution. Whenever we go to Tennessee, there's one in Franklin, Tennessee, that we always end up eating at with my brother-in-law and his family, and the hot dogs are good, but I don't know, everything else seems to suck. But that's just me. I don't eat meat anymore, so that and if I do that, that's a one-off for me at Sonic, and I end up feeling ill afterwards. Anyways, ARMH, there's another semiconductor. Bada boom. That looks a lot like the SOX, doesn't it? But you can see this thing broke down. It's never really given you any major short sale points, although you could, now that you've broken down below the 200-day and rallied up into it. And see, that's a wedging rally. Could be headed lower. And maybe that's a short point. Would have been nicer to catch this gap down move. That's what I'm thinking. Even here, this ASML, I wonder if this is a shortable gap down. Because you've gone through the 200-day, you see that right here, and so you would use the high of the day at 104.29, or better yet, if you saw some kind of an intraday bop back up towards the 200-day line, maybe you could hit it. So, but I think overall, you get a sense that we're kind of in a bifurcated market. You have to be a little bit like I don't know, resourceful, a little wily, a little tricky, and look for things that are moving. If you still own Mobileye, I think that's great. It's now officially 10% past where I sold it, but I bought it down here. I got a nice move out of it, but sometimes they go further. I did the same thing happened to me with Cyber in here, owning this move and then selling it about here and then watching it go like 15, 20% past where I sold it. Of course, I felt better when it came down, and then it was viable again, and then you played this move from here to here, sold into the breakout at around 70 and change. Of course, it goes up to another buck or two first, and then it comes down. And so I think in general, this is it here, I'm sorry. This is the breakout. This is where they priced the secondary offering, and then it jacked, so bought it right here, jacked, broke out, sold into this move at around 71, I think it was. And of course it goes past just a bit, and now it's blowing apart. And I'm not sure what to make of this for those of you who want to buy it. I don't know. It's at this point, I would think it would be acting much more strongly, given that the stronger names, it's more like a VDSI and less like, say, a Palo Alto Networks, less like a Fortinet, and less like a FireEye, which these are trying to hold up, and hold. This is holding its recent breakout. This is probably in your best buy position here, if that's what you want to do. So maybe it's worth a shot here. And on the 620, you kind of had a buy signal here on the 620. Now you're pulling in. Okay, so everybody run in and buy it. And let's see if we can push it up like 50 cents from here. Okay. Me first. It's not moving. Come on, you guys, get in there. Let's see. PAYC. I was looking at this last night. Paycom. And yeah, it's sitting along the 10-day line. It's violated the 50-day line. And it looks kind of ugly. It's undercut this low. The fundamentals aren't necessarily all that bad here. You're in this base on base, so you come down to the lows. You try to break out, but it wasn't really a breakout attempt because it might have been a little premature as well. And so maybe it is setting up to go. That might be another one. But the wrinkle here is earnings coming out. That's not too bad. I think if you have something with earnings coming out in the next 2 weeks, 2 to 3 weeks, then I think you've got something that is workable as a good trade, and maybe you can get some cushion that allows you to sit with at least part of your position or some measured, size position. And this might go from here. That's a possibility. So I mean, it is actually on my list of things to watch. Another one I had on my list is this HNT HealthNet. This one had a gap move, and then you pull in. I've seen this set up before, where you have a viable gap up, comes out of a base. And let me blow this up a little bit. And it comes out of a base, and then it kind of drifts back into the top, and it holds tight along the 10-day. This actually looks tighter than it probably is. Let's see that. Trying to get this to look less flat. Okay, there we go. And so now you're just sitting here real tight, and I'm wondering if this thing's going to move off. And it reminds me a little bit of just a little bit of this sort of action, where you break down off the peak after a big run or a gap up. Yeah, maybe I'm a little wet there on that one, but that's a possibility. Dr. K, you know anything about why the healthcare stocks have been gapping up and running up? There's been a few others. I think UHS. There's been this Anthem, AMTH. Is that it? No. Help me out there.
Yeah, I don't
okay,
really.
H&T is being bought by CNC. Okay, never mind then. Screw that. I mean, forget that. GTN, someone's asking about. Gray Television. Well, you had to buy it here. So I think we put out a pocket pivot report on the stock when it was here. So coming after here, you're kind of late.
This is where you want to actually think about taking some profits.
Yeah, because you're up, what, about 10% on that puppy. So QRVO hitting the 50-day. I know, we looked at that already. So you're right at it. And I don't know, do you short it here? I suppose you could try to. Anyways, I don't know. I think we're done. That's pretty much all I have. You can see there's some stuff. I'm watching the FireEye trade. It was interesting right now. It just hit 48.70, and then somebody knocked it back down below 48.60. That wasn't me. Interesting. Anyways, Sedge moving higher. You guys hopefully all pushing that higher for me. Is that it? So anyways, any other questions before we bag it today? Because I'm pretty much done. Yeah, there's a little of this, a little of that. I think it's basically a bifurcated market where you can come after things long or short and work it that way. So let's check this. Yeah, they come out with earnings at the end of the month, so you have to decide whether you'd want to play something like that. Anyways, I guess no other questions. So that's all I've got. You got anything else to add, Dr. K?
No, we're all good over here.
All right, so thanks for showing up, you guys. Hopefully you got something out of this today. It's a little bit iffy, you know, things are extended off the lows in some cases, but I think you watch where the strength is and you wait for an opportunistic buy point to show up. You know, like I guess you just hit that with the sedge. So seems to be holding. I wouldn't be surprised if at least try to make a move back to the 50-day moving average. Anyways, we'll see what happens. Maybe this whole thing rolls over and tanks. So. Anyways, thanks for showing up as always, and we'll catch you next week. Have a great weekend. Take care.
So long, everyone.